You're watching this Forex Preview video here at xm.com. We'll be having a look at German GDP numbers out this week and the outlook for the euro. I'm Christina Marujos. Joining me today is Senior Investment Analyst Rafi Boyadjian. Now, Rafi, Germany will report its first estimate for fourth quarter GDP this Friday. Of course, there are growing concerns regarding Europe's largest economy. So what should we anticipate in this report?
Well, we're not expecting anything spectacular in the GDP numbers. We know that the German economy has been struggling. We had the full year GDP report for 2019 out already. So we've got a good estimate of a good picture of what to expect for the actual fourth quarter numbers. Forecasts are for 0.1% growth. That's the same pace as in the third quarter. So that just highlights how sluggish growth has turned in Europe's growth engine. So there were several headwinds for the German economy in 2019, and 2020 looks to be pretty much the same, if not worse.
Exactly, because we have all these external risks looming over the German and Eurozone economy in general. We have the imminent trade war with the United States. We still have the uncertainty regarding the trade relationship Europe will have with Britain after Brexit. More recently, the coronavirus outbreak and all the potential chain reaction effects it could have on the economy. And yet we don't see the German government stepping up with fiscal help.
That is right. No sign yet of an imminent fiscal package in Germany, which is what all analysts have at markets and central bankers as well have been calling for. In fact, it may be even more difficult to get a substantial fiscal package in Germany because we had the leader of the CDU party, that's Angela Merkel's party, unexpectedly resigning. And that leaves the country in a bit of a political vacuum because now they have to elect a new leader and we have elections coming up in 2021. So the most we're likely to get from Germany is perhaps some government help for green industries, which is unlikely to provide the boost that is needed. And we've got, of course, the possibility of the trade war moving on to Europe now that things have settled down with China. President Trump wants to focus on Europe in 2020, and that poses the risk of auto tariffs, which would be hugely damaging for the German economy. We've got Brexit. The future relationship has yet to be negotiated, so those risks will likely resurface later in 2020. And as you said, the coronavirus, which may just prove to be a temporary hit to the global economy, but it's too early to know for certain what the full cost of that virus outbreak will be. So all in all, it's not looking too great for 2020 for the German and Eurozone economy.
And before I let you go, let's have a look at the euro. It has been under pressure recently. Do you think any encouraging numbers in Friday's report could lift the single currency?
Well, we know for certain that we're not going to get any positive surprises, but investors may try to focus on any encouraging signs in the details of the report, such as any indication that the manufacturing downturn is perhaps bottoming out, and if consumer spending also was more resilient than anticipated in the final months of 2019, and that would perhaps help reinforce the PMI numbers for January, which did show a bit of an upturn at the start of the year, which might help the euro stabilize, which has fallen to 4-month lows against the US dollar, but investors will need to see something more substantial in order to change their outlook for the euro.
Rafi, thank you for joining me today, and thank you for watching this Forex Preview here at xm.com.